Hello, Oracles. How are we doing this evening? Here in Connecticut, we are getting some rain for the first time in quite a while. So, it's cold rain, cold November rain, just like Guns N' Roses said. It's a little grumpy feeling out there, but it's needed. So I'm totally cool with it. But I don't like driving in the rain. As I've gotten older, my eyesight not as good, and I have really good eyesight, but yeah, don't like it so much. But that's fine because I'm home now and I'm with you guys, and that's all that matters. So, yes, Kendall, thank you. Please smash that like button. Appreciate that. All the support I can get on here is phenomenal. Love chatting with you guys. So today we'll go over NVIDIA's earnings, and I apologize. I meant to put out a video last night, but I forgot to charge my laptop. So it's kind of the universe's way of telling me to continue taking Wednesdays off and relax. So I did. But yeah, so tonight we'll discuss a little bit of NVIDIA's earnings, what transpired there, what's going on with Bitcoin, pushing really close to 100K. Can we cross it this week? Maybe that's a little Thanksgiving gift we're going to get for next week. We shall see how that goes. I think long-term Bitcoin is obviously going to clear 100,000 without a problem. But who knows what's going to happen in the near term. So we'll see what happens with Bitcoin. And of course, other coins will follow along. That I think that the thing what's going to happen with other coins, all the altcoins and things like that, is it's going to be more about the blockchain than the coins themselves. And the coins will naturally kind of, based on supply and demand, as cryptocurrency becomes a normalcy more so in life than it is right now. When we get to that point where, maybe people are actually taking cryptocurrencies as actual currency for goods and services, that's when you're really going to see the next level of everything move forward. And that's when you're going to see which altcoins are actually going to be worth something and which are not. Right now, it's all speculation. So once we get to the point where it's actual functional stuff on a more mainstream basis, then we're going to see which ones are good, which ones are not. And again, until then, there's speculation. I keep Dogecoin for that reason, because with Elon supporting Doge, I think that could potentially be one that is used as a functional coin. And the only reason I have SHIB is because it's going to ride its coattails until people realize whether it's functional or not. And then I've got Bitcoin and Ethereum, and those are the only ones that I own. But I know I've got friends who are big into all of them, lots of altcoins, and they have a lot more knowledge on the stuff. My knowledge is very basic, and I follow Warren Buffett's strategy of investing, of don't invest in something you don't know anything about. And so my level of cryptocurrency is stuck at those four, and I'm not investing any more than I don't know. Lang, my eyesight is better after cataract surgery, one for reading and the other for driving. My first eye surgeon. Oops. Yeah, no, I was blessed with really good eyesight. I get it from my dad, and my eyesight is, when I was younger, was 25. I remember going to the eye doctor, and he asked me to read a line, and I read the line below the one he wanted me to read. Like, okay, so I had really good eyesight. I just was not good at following directions. But yeah, so I really, really good eyesight, and even now my vision's probably like 20/20. But because I'm not used to it being 20/20, I'm like, ooh, is this normal? Is this not normal? But again, I just turned 45, and with my eyesight the way it is, I'm perfectly happy. I just choose not to drive at night when it's raining out because it's not as easy to see. And I think my eyesight is probably another reason why I was really good at baseball also. Hitting obviously is hand-eye coordination, and when you have eyesight like that, it's easier to, hit a baseball with much better vision. All right, give you guys a couple more minutes, and then we'll jump into what's going on today. I'm making a few changes in my portfolio just based upon what I'm seeing in the market. I still do think we're going to be getting a recession. I haven't changed that thesis at all. I still think we're going to get signs of it in Q1 and Q2 of next year when we get jobs reports for Q4 of this year and all the seasonal labor stuff that's going on. So I think that's going to be an issue that we see next year. And I think the thing with Trump is him taking over. If he takes over at a point where the recession's basically starting and rearing its ugly head, he's not going to have to be like, hey, I am not responsible for this, but I can be your hero and save you. And here's the ways we can do it. And that's where Elon and Vivek Vivek and the Department of Government Efficiency are going to come in and start kind of building a stronger foundation to get us out. Yeah, obviously, time has to tell whether that's going to work or not and what's going to end up happening. But I think we may start Trump's presidency with a recession and then us digging out of it afterwards. And if they actually pull through on what they want and it plays out the way they want, I think we could be much stronger on the other side. So, with that said, I'm kind of going a little heavier on the ultra yield. I actually just bought Tesla again today. I know I'm late to the game on that one. I should have bought in when it was $11, but whatever. I'm doing it for a very, very specific purpose for a very short period of time. I am buying them strictly to get that income generation coming in to have more free cash flow in my portfolio so that if we do get into that recession, I will be able to have that extra cash flow to add to all the positions as the market pulls down. Because naturally, if we hit a recession, we're going to see the market pull down, probably hit a deep bear market of some sort, maybe similar to 2022, but more on a broad base because 2022 was very heavy when it came to NASDAQ and the tech sell-off. We saw it everywhere, but it was very heavy there. I think it could be kind of everywhere. But it'll be those times where if I have that cash flow coming in, even if I have a bit of that NAV erosion, I can still use that cash flow to buy into those other plays. And then because of the way those ETFs work is I'll cap what I end up buying them into. But as we end up coming out of it, those will go up. And it's always, always, always 100% better for somebody who is looking for all total returns to buy into what the underlying holding for those. So, if you're interested in Tesla, NVDY, AMZY, GUI, FBY, all of those, if you were looking at income generation strictly, those would be the ones to get into. However, from a total return standpoint, you will always underperform with all of those because chances are they're going to move up significantly faster. And there's a cap when it comes to those yield max ETFs. You'll be capped on the upside and you're going to miss out on a lot. So Tesla has proven to outperform significantly. Tesla. So again, you really have to be careful as to how you're going to play those. NAV erosion is real. I have lost money on Tesla. Now, granted, if I didn't sell Tesla and I held through, I'd probably be fine right now. But either way, NAV erosion's real on them. And realistically, at the end of the day, if you're not using it strictly for cash flow, or if you're playing options on them of some way to make extra money on top of it, you're probably not going to make out in the long run. Their expense ratios are silly high. Some are at 1%, some are over 1%. So you've got to be really, really careful with those. I am capping mine at 5% of my portfolio. I will not go over 5%. And so because I'm going to cap it at 5%, I don't mind using those as just a vehicle to have that higher cash flow coming in to be able to add to my stable plays, my higher yielding ones like my BDCs, which BDCs are going to have to be careful if we hit a recession too. So I got a close eye on those. If we hit a recession, I may end up selling those or cutting down on the position, knowing that previous recessions, we've had them cut dividends. So really want to be careful of those. REITs, I don't think we're going to get into a real estate recession this time. So those should be fine. They will come down. But if they come down, they probably will provide a higher yield because even realty income, Vici wasn't around back during the great financial crisis, but realty income increased their dividend during the great financial crisis. So even the housing market crash didn't affect them as much. So this time around could be very similar, unless, of course, the entire portfolio of realty income. Now, a lot of people are liking Agree Realty better. I've been playing with the two of them. I'm not sure if I'm going to, I don't own Agree. I own Realty Income. Don't know if I'm going to switch over. I'm going to see. Just kind of keeping it on my my watch list and seeing what's going on. But either way, I think we'll be fine with it. And if it comes down in price, that means the yield's going to go up, which means I'd make more money on it as we come out of a recession. And of course, I'm not banking on a recession, so I'm still continuing to add to my portfolio and build up my cash stockpile at the same time. Because if we don't get into a recession, I don't want to miss out on that upside. So I'm playing both ends. That's kind of like my hedge on the way up for it. Google punished by DOJ. Yeah. To sell Chrome, is it good for to hold for? So, I actually watched somebody else's video discussing that exact thing, and realistically, Chrome having to peel off of Google might actually be good for the short term. It could. I don't think it's going to affect them all that much if that happens. I don't think it's actually going to play out. But if they force that to end up happening, I don't think it's going to really affect Google all that much. I mean, they've got yeah, YouTube. They have so many other revenue streams, and they're partnering up with is it Amazon they're partnering up with? Man, they're partnering up with someone. Their Google's going to be fine long term. I'm not concerned about if Chrome has to sell off whatever. That's not gonna bother me whatsoever, and I think it'll be fine. And I have GUI that I just bought into, so with the negativity on top of it, GUI's been coming down. So buying that at a higher price, and of course, any volatility going into these stocks is also going to increase the dividend payout that those pay. Um, but again, I have a very tight leash on all of those and very, very minimal positions that I'm keeping on them. Tesla, I am keeping. Its loss of nav is getting smaller. Cost Tesla going up. Yeah, and again, with Tesla jumping the way it did, of course we have massive gaps, but right now, actually, I'll bring it up for you guys because I was looking at the charts before I got on here, and let's see, I want to do this one. Weeble. Nope, that's NVDA. Let me get down to Tesla. There we go. Yeah, so like looking here is like coming down to earnings, we gapped down, and then we had consolidation, and then gapped up, and it's weird because it's like almost like this gap never filled down or up. So there's this weird gap down to 218. One of the reasons why I think we will come down and fill this 218 gap is because it's literally gap on both sides, and you never filled the gap on the way down. But anyway, we jumped up. Then we ended up making this classic bull pennant right here, this bull flag, and then boop, we jumped up again. Now here we are. We come down, making another bull flag, gapped up, and now we're consolidating. So at this point here, with the consolidation, that's typically what you're looking at and saying, all right, is this going to keep coming down and create this other little bull flag here and then jump up again? Or are we going to consolidate sideways and maybe create a situation where we could either go up or down and then maybe collapse down? So again, we've been kind of holding here, and that's where I drew this line the other day. If you guys were watching, right at that 345 level, and we just can't seem to break through that. So again, when we jumped above it the first time after this big jump here, we came down and we closed at that level. Then we fell down below it and we can't get back above it. So it seems like 345 is a pretty strong level right now. So we'll just kind of pay attention to that one as we're moving forward. And again, if we have a red day tomorrow and we continue to create this bull pennant here, we could be looking at maybe we end up jumping and gapping above that 345, pushing above the 350 level, and then going up from there. So that'll be something to pay attention to with that. And again, of course, if I had Tesla, I got it right here. Tesla basically gapped up the same exact way. So it was down here under the $11 mark, which of course that would have been the ideal place to buy because now it's up 50% from there. But from there, it gapped up, created that same bull flag, gapped up, same bull flag, gapped up, and now we're consolidating. So it tracks along very similarly. You're not going to get the same percentage gains as you will with Tesla, but it does the same thing. And actually the percentage gains I think might have been more. 218 to 3. It's about the same. So this one here was actually about the same with the jumps and gaps up. So actually wouldn't have done too bad. And I guarantee you the payout on this is going to be absolutely insane this time around because the volatility has been wild with the options. So I have no doubt you're going to be seeing some crazy payouts when it comes to Tesla this month. And Misty. Oh man, Misty is all over the place. Yep, and MicroStrategy, yep, they're getting shorted by Citron. So I mean, Misty's one that for me, I am taking FOMO right out. I think Misty's MicroStrategy is on the very high end. Anybody buying in right now has a very limited upside and a much larger downside at this point when it comes to MicroStrategy. So I am really not interested in MicroStrategy or MSTY either because I think both are going to come down. Tesla may do the same thing because there's a lot that have pushed up. But Misty's one of those ones that I'll keep on my radar because when you pay attention to how it trades along with like BITO is another one that I have, or even Coney CONY. So I know that's based off of Coinbase, but it kind of tracks right along with all the cryptocurrencies. When you see the cryptocurrency patterns, and it's usually a couple of years cycle, but when you see those patterns, they're very, very predictable. And so we're going through a run right now. And then chances are, my prediction is that we're going to run up and maybe we push 125, maybe higher on Bitcoin. And then it's going to end up coming back down and kind of consolidating between the, maybe 50 to $60,000 range around there. Whereas just like before, we went up to 75 or around the 70,000 mark, and then we came down and we kind of consolidated around the 15 to $20,000 area. So we may end up pushing up to the 125,000 and then come down and kind of consolidate around the 50,000. So every single time we run up, we pull down significantly, but we consolidate and hold a level much higher than we did previously. So that could very well happen again. If it does, that's where I'm going to load up heavier on my Bitcoin and my other cryptocurrency positions. And I'm going to be loading up on the things like CONY, might end up buying MicroStrategy at that point. We'll see what it looks like. My MSTY I'll load up on, because how I'm playing with my portfolio is those growth stocks that I have and the cryptocurrencies, like for instance, Doge, as it's been climbing up, every once in a while I'll sell out of $50 worth, and just add that to my portfolio. It's like, you know what? I don't know how much higher Doge is going to go. I have faith that I think we're going to end up getting ourselves to $1 on it. But if I just take $50 off, that's less coin that I'm selling every single time it goes up. So for $50 worth of coin is less coins each time as we go higher. So the way I'm doing that is keeping that number of coins, kind of trimming off the top there, almost like a portfolio manager just balancing off and saying, hey, these stocks have run, they've now pushed past my limit of 10% of my portfolio, just trimming off the top. That's all. But they still have a good number of shares or whatever underneath to continue growing if that ends up happening. And just the natural cycle of the market normally is that it's going to end up pulling down. If it's going to be just that individual stock running, you will end up seeing some sort of rebalance of that is going to come down, and then you can buy back in as it pulls down a little bit. I'm going to be doing the exact same thing when it comes to the cryptocurrency, assuming we end up playing out the same way we have done historically. Yes, Bitcoin running up so much since November 5th, crazy. Will be of 125K or higher. Yeah, I think 125. I think some people have been predicting 150, so maybe we push up and have a spike to 150 and then come right back down. But that seems to be what most people are anticipating. Obviously we need to break through the $100,000 barrier first. That's going to be a huge one because there's going to be a lot of people who are just going to be looking at the 100 and saying, that's my sell. I've got that mentally I'm sitting here saying, hey, when Bitcoin hits 100,000, I'm selling, and that's it. And once you clear out all of those sellers, then you'll have room to move past the $100,000 mark. But we're going to have to get through that first. And I think that's kind of where we're at is, people anticipating that will then put in hey, I've got the $99,000 sells in because I don't want to wait till 100,000 because then people might sell out there and I might miss my opportunity. Those are people who time the market. I don't play that game. I just kind of see it, sell a little bit here and there, buy more when it's coming down. That's not a game I'm playing. I'm still playing cryptocurrency long term, but I'm just being wise about it and kind of trimming some off to add to my portfolio in other ways. But yeah, I think 125 or 150 is the next level some people are looking at. And then I think from there, like I said, we will end up coming down and perhaps during a recession, because cryptocurrency, again, as I mentioned in the earlier in the stream, it's not something that people are using as an actual functional use right now. I mean, some people are in the crypto community, some people are, things like that. But as far as mass adoption, like you're not going down to McDonald's, Burger King, or your grocery store and using cryptocurrency to buy things with. Once we get to that point, it'll be treated totally differently. But until then, we're going to end up having the same situation where, like we saw in 2022 in the bear market, that's when Bitcoin crashed back down to the $15,000 mark. If we get a recession next year, that's, I think, when we're going to see it pull down. Until then, I think we could still see the market running up unless the market starts to anticipate a recession because the market's always going to look 6 to 12 months ahead and react based upon that. So if the market sees a recession coming 6 months down the road, we could see the reaction earlier. But until the market sees that potential, we might not get a reaction and we might continue to run. You'll get your normal cool offs and your normal, selling and things like that, and consolidations, whatever. You'll get that normal stuff, but you won't get an actual, real sell off until we get to the market understanding and recognizing that we're going to get to some very difficult times. And hey, maybe we don't. And if we don't get to those difficult times, we'll have normal corrections along the way, as we always do with profit taking, and we'll just keep going up. Do you have Coney? Yes, I do have Coney. Coney is actually my biggest of all my yield max ones. They've been the one doing the best for me. I only have 50 shares. I had 100, and then I was kind of changing my strategy and getting away from the yield max, kicking myself for doing that. I wish I had done what I'm doing now and kept doing that for all of last year. Even understanding the NAV erosion and how it goes, the way the market ran, I would have been profitable on all of them. Super profitable on Coney. I can lose all of my money on Coney right now and I still won, so that's fine. But with the way the market ran, I would probably be well over $1,000 a month coming in from dividends from those, just to be able to pay and put into other stuff. But you know, live and learn. And again, I don't like the NAV erosion for the long term. I don't like the expense ratios for the long term. But if I'm going to be holding on to these, let's say for 6 months, and then I can trim down my positions on them and take some profits, put that into other areas that are going to be a lot better when it comes to downside risk mitigation, recession proofing it, my portfolio a bit. I'll sell off on a good chunk of those. And then once I know that we've hit that bottom of the recession, we're starting to come back up. That's when I'll add back to them so that I can start getting the income coming in on the way back up from those and play it that way. And I'll use those as almost like a growth style stock that I own when it comes to a little bit of that swing trading mentality and the dividends along with it. So that's kind of how I'm going to be playing those. I don't have iBit. I have BITO, which when Darth was on here, let me know about that one. So I've got BITO, which is not the same. I know that as the ETF. When it comes to that, I own just straight Bitcoin. But yeah, Coney and BITO are the two ways that I'm currently playing any sort of options strategies whatsoever on Bitcoin. And actually, speaking of, there was another one I wanted to look at. Oh yeah, and next week, oh yeah, here's BITO. So BITO has been on my radar for a while, and I totally forgot all about it. Darn, man, I wish I didn't forget about that. It's been doing very, very well. But oh well. Hey, again, live and learn. Yeah. So next week I will be doing a video on Palantir's gaps because I told you guys I would do that. So I'm going to do Palantir and Nasdaq. Let me see what I've got going on here. Yeah, so I'll do Palantir and Nasdaq gap analysis next week, and then next week with the holiday, markets are closed on next Thursday, of course, and then the markets are only open until 1 p.m. on Friday, the day after Thanksgiving. So just make sure you guys have that on your calendar to understand how that's going to work. I'm curious next week. I've got to see what the payouts are going to look like, because like my weekly payouts that I have on WDTE, QQQY, those are two I might end up dumping out of. They pay weekly, but like I'm positive on the returns on them, so I'm not doing poorly. But I don't know. I don't have the right feeling about them, so I might dump those and put that money into the other yield max plays or just other plays entirely. But I've got to see what the payout days are going to be like, because typically what the system has been is we'll get the declaration date on Wednesday, the X date is on Thursday, and then payouts on Friday. So I'm curious as to how that's going to work, if they're just going to do X date and pay date on the same day, or X date and declaration date on the same day. It may actually be in their calendar. I'll have to take a look, but I'm not too concerned. But next week is the payouts for TSLA, GUI, and what's the other one that I have? Oh no, those are, and then just my weeklies. I also started buying into XDTE. That has been doing extremely well. But again, I'm doing this for the short term until we get some sort of signal that we're not looking good in the economy anymore. Then I will thin those positions out and move it into much safer places. Maybe just cash, depending on what we're looking at for yields right now. Because right now SoFi is still paying out at 4.2% interest. So I'm totally happy with the 4.2%. Can't complain about that. It's paying out better than pretty much every stock that I own, except for I think UPS. And UPS, I'm a little bit upside down on. Um, but yeah, yeah. I'm looking for it. I've been looking at my portfolio, and again, I'll bring it up for you guys so you can see it. Let me do it this way because my portfolio right now. There we go. I'll do full screen for you. So yeah, as you can see, these are all my positions now. So I definitely increased my ultra yields, and I will continue to do that until the market tells me otherwise. XDTE I added, that's at the top. I mean, yields on these are crazy, but again, NAV erosion is also real, and the expense ratio is also real. So that's why these here are a very, very specific play to just generate income. Like for instance, the monthly payout is $216 for me on these, but that fluctuates a lot. So, like Coney paying out $2 a share, that's not always real. AMZ, not always a dollar. Like these fluctuate significantly. This go down to 50 cents, so it cuts this dividend in half. Same thing with Coney, could come down to a dollar, cuts that dividend in half. So these are things to really pay attention to and understand that you're only going to get that. And that's why I always recommend tracking your all-time return. So AMZ I just bought, so I'm not concerned about that. But like Coney, because of the timing I bought it at, and people who bought Misty right up front, same thing. Like I'm up $2,200 on this. I did not put in $2,200 into this. Actually, what did I put in? Total cost $985. So I spent just under $1,000, and I've made 2,200. And so I have no complaints on that. YMAX, I'm up positive. I'm up 17%. And then going to see Tesla, I lost a ton of money on because I sold the bottom. But I wasn't happy with the performance on it. I used it for what I used it for, and I learned a lot from it. And so now I know how to utilize it better for what I'm trying to do. And then looking at the QQQY, again, not happy with it, but I'm still up 48%. WDTE, I'm up 37%. So I can't really complain about being up that much, considering I've owned them for less than a year. But it's still one of those things that, just keeping a very close eye on it, because if they turn and it starts collapsing down, then I can lose the money in it, and that does me no good. But that's why all of this is a hurry up type of situation to get as much income coming in to spread it out. And I'm not just dripping all this money in. I'm not taking this money and putting it back into these plays. I'm taking that money as cash, and then I'm spreading it out amongst the rest of my portfolio. And for you guys who are new, my portfolio is set up to tell me I have certain levels that are set up. So for instance, this whole level here is $1,650. Down here, it's $1,600. Down here, it's $1,550. So I've got the calculation set up for it to tell me how much I need to add to keep it at these levels, and then I just pay attention. It's like, Hercules Capital, this is a BDC. It's one of the 3 I own. And if I was going to chop any, this would be the one. So I'm paying really close attention to this one and saying, hey, they just went up on their dividends significantly. So I think they went up by 25% or something. It was crazy. But still want to pay attention to them because they're big into lending to tech companies, things like that, which obviously it's a very hot market. But if we hit a recession and that market collapses, this could not do very well. Maybe it ends up cutting its dividend entirely. So I've got to chop it. So you have to know what is going on with all of your companies and ETFs that you own to understand what's going on with them all. But that's how I follow my entire portfolio here, is it tells me I need to add $23. So a little over 1 share I need to add to it. So all the cash I get from all of these and all the cash I get from all of these in the green all get divvied out based upon how this is. So all that cash comes in, that cash comes down to this amount right here. And then my goal for this is 10.25%. So this formula here tells me When this is at 10 and a quarter percent, anything over 10 and a quarter percent is cash that is usable to spend on all of these. And I just work my way top to bottom because it goes, top yield to bottom yield. And I'm using these for cash flow specifically. And that's it. It's a very simple process. And it's my version of a dollar cost averaging, which is basically catching swings in the market, which isn't just blindly dollar cost averaging wherever, which historically has been the best way to generate long term wealth. Mine does it in a manner where I can dollar cost average into any stocks and ETFs that are underperforming. And this way I can add at a lower price and it's getting a better bang for my buck off of a dollar cost average. And that's how I've set that up for mine. Obviously, it's not a perfect strategy. There's a lot better strategies that are out there. But for me, to make it simple, this is my modified and improved dollar cost averaging strategy. And it's been doing very well for me. Let me see. And so yeah, and so that's what I've been playing with on mine. And again, using income generation vehicles just to get that cash flow to put in all those other plays. And then I just pay attention to what's going on because right now the market right is not it's not settled. And while yes, the market's going up and everything seems hunky dory and everybody's happy, there's a lot of uncertainty. It's almost like when you eat something that maybe you shouldn't have eaten, or that it bothers your stomach, and you feel great when you eat it, but then you have that gurgling going on and you're not sure what's going on, you're not sure what's going to happen. It's kind of where we're at right now in the economy. Is everything feels good based upon what we're seeing on the surface, and it made our mouth happy from what we have seen, but what's going on underneath might not be the best. We've got a jobs market that's in question. Unemployment seems to be going up, and unemployment historically, the Democrats will add more jobs to the market when it comes to the government jobs, but the government jobs don't typically help when it comes to GDP, and it doesn't help with bringing in revenue for what the country needs for taxes. That's where private jobs come in. That's where the private market, having all those companies that are out there, like the big tech companies, paying all of those taxes in, are what gives the company or gives the country revenue. And the country runs basically on 50%, I think it's 99% small businesses, but those 99% small businesses cover 50% of the workforce. And small businesses have been collapsing over the last year and a half. So we are losing a lot of that revenue generation coming in from taxes from small businesses into the country, but we don't show it with unemployment because the government keeps on adding more government jobs. But those government jobs are expenses, not revenue. So on top of the fact that we're bringing in less revenue, we're creating more expenses, and it's kind of like masking a problem. And that, I think, is what we're hearing from Elon and Vivek about, kind of cleaning that mess up a bit. And it's not the healthiest way to go. Now, it's great because we gave a lot of people jobs. Cool. People have jobs, they have income coming in, but they're jobs that were not really necessary. It was the need to give those people jobs was to make unemployment look better, or to just give people money. But again, it's like if you were going to go out there and you've got children and you decided to pay them, pay your child an allowance to say, hey, move this box from this side of the room to the other side of the room. All right, cool. Well, now you've given your child some money so they have some money to go spend, on whatever they want, but you didn't get any revenue from that. You only had revenue coming in from your job, and that's now a new expense for you to pay your child. And you really didn't get much of a return on that investment because moving that box from one side of the room to the other really realistically did nothing for you. It did not improve anything whatsoever in the house. You just gave your child something to do. And that's kind of what a lot of these jobs have been when it comes to the government jobs. And sure, the people who have those jobs, I'm sure they feel like they're useful and whatever, but the ongoing joke for a lot of jobs going on out there when it comes to like the DOT work, nothing against the DOT guys. You guys work your butts off, and thank you, because obviously the infrastructure stuff has been amazing because the roads that I drive on are way better, and I saw you guys busting your butts. However, the long-standing joke has always been, the government gives you one shovel and there's five guys standing around looking at the one dude with a shovel. And so situations like that happen in the government all the time. You're not going to get the same work ethic on a broad scale like you're going to see at those big tech companies um, like Apple used to be. It still is, but not as much. But Tesla, Amazon, companies like that, where people, you could argue with that maybe even overworked. But the work ethic there is significantly higher than you would see on a broad base when it comes to a lot of the government agencies that are out there. So I think that's one of the things that they're looking to do when it comes to Doge is kind of fix some of that. And hey, let's work on getting those jobs that are government jobs out to private jobs. And that's the thing that I really like the most about their strategy behind this is they're not just being like, hey, we're going to cut all these jobs and you guys deal with it. They're saying, hey, we're going to help transition you from a government job to a private job. And that's kind of what they're looking to do is transition it from we're going to take you from a job that's an expense for the country and help transition you into a job that's going to help generate revenue for the country. So it's great for the workers because either they're going to help them get a job and or they're going to be giving them pay and severance along the way so that they're not losing that money. So I mean, to me it sounds like it's a win-win situation because you're going to cut expenses from the government while not making people who lose those jobs lose money as well, thereby showing that maybe you do end up getting it's going to be sort of a weird recession because you would get a jobs loss recession, but the people who lost their jobs, at least from the government standpoint, actually still have money coming in. So they still have the money, but not a job. So it's almost like you're going to be giving these people almost like a stimulus check, but it's very specific to who they are and what they were doing. Which I mean, I can't argue with that. I think that's a great plan if they can actually pull it off and do it that way, and then help transition as many people over into the other jobs out there. And again, in doing so, that could help kind of spur some of the market on as well. And kind of if we do hit a recession initially, that could kind of pull us out of it almost faster than expected. But of course, that's best case scenario. We'll see how that plays out. Um, Coney, when pay date early of the month? Coney was last week. Um, if you look at Yield Max's website, there's actually let me see if I can bring it up for you. There's a chart on there that you can see that shows their payout schedule because what they ended up doing was they used to pay all of them in the exact same day, and then people were like, oh, we want to kind of get paid weekly on this, so they broke it up into blocks. And when they broke it up into blocks, it gives you kind of a good assortment of different ones to get into. Oh, here we go. I'll bring this up for you. So if you're looking at here, so these are the payout schedules that they've got. So you've got groups A, B, C, and D, and then of course you've got the YMAG and YMAX, which pay weekly already. But here's your different ones. So you go down here to look at the groups. So Group A is Tesla, CRSH, GUI, YBIT, Zomo, and all of those. Group B is NVDA, FBY, JPMO, MRNY, PLTY is the new one. Group C, which you're talking about, is Coney, AMDY, NFLY, a bunch of the other ones. And then Group D is MISTY, AMZY, APLY. So they broke it up into these groups. And that's why when I chose mine, I chose Tesla and GUI for this group. For Group B, I chose FBY. I might get NVDY. I'm not sure. But I chose FBY, and I also have BITO, which pays in this same week as well. Then in Group C, I already have Coney, so I left that as it is. And then in Group D, I picked up AMZY. Again, I thought Misty was going to be a little on the higher end, and I didn't want that. So I jumped into AMZY. So now every single week, I am going to be getting paid from Yield Max, not just with because I already have YMAX, so I get paid weekly from that. But now I'll get paid weekly from Tesla and GUI one week. I'll get FBY the next week. I'll get Coney the week after that, and then I'm going to get AMZY the week after that. And so that's why I broke it down that way for myself. So every single week, it's almost like getting a weekly paycheck coming in from every one of those positions. So as I build them up, I'll be able to dollar cost average a lot faster. And because of the way the market has been moving and fluctuating as much as it is, I wanted the cash flow coming in on a faster rate so that I can distribute it at a faster rate based upon all the market fluctuations. Fed rate cut this December or not? Man, I thought for sure we were going to get one. My prediction was 50, 25, 25 to go into the end of the year. Seems like the market right now, based off of what the Fed's been saying, is they might pause. I don't think that's going to be a good thing. I think that's going to create the problem that we're already seeing even worse. But we find out. I'd have to check the date on that. I think that's mid-December that we get that. So yeah, I think we've got like 2 or 3 weeks before we get that call. But yeah, right now the market is looking more like a pause pricing and then a rate cut. So if the market's pricing in a pause and we actually get a cut, then that could be good for the market to get us that Santa Claus rally. So we'll see how that plays out. Let's see. Isaac. Hi, Tim. Are you completely out of Tesla? Missed your update since taking time. Well, welcome back, Isaac. Thank you. And no, I have not completely sold out. I sold out a good chunk of it. I'll bring up my portfolio again for you guys to see, and I'll show you in there. With all of my ETFs that I own, my IRA, in my 401k, I own a lot of Tesla stock, just not individually. I own in my IRA, I never sold any of my IRA, so I've got 11 shares there, and I'm just letting it ride. I've cost basis of $188 there, so I'm letting it roll. And then in my main portfolio, I'm down to 2 shares here, but I will be adding back to this very soon. So again, the way it plays out is these different levels here. So within the next year, I will be adding to this position, of course, unless it runs massively, which, if it does, again, I have plenty of other places that I own Tesla. I won't be too concerned. But if we do end up getting a recession and it pulls down, then I'll be adding to it. Again, I think we're going to fill that gap at 218 at some point. So I'm just anticipating that pullback, and then I will be able to add back at those levels, and I'll be able to add more in. So for me right now, I still own those 2. I'm not selling either one of these, and I'm just going to let it go from here. And at this point right now, I'm going to be looking to be adding more to Tesla and not selling at any point. But no, I'd never sold out entirely from it. Just because I do still have the long-term faith in it. I just saw at the time I had a lot better opportunities. And while Tesla was trading sideways, even if I held on to all of the shares that I had in Tesla, I still would not have made back all of the money that I made by taking that money and putting it into all these other areas. I made significantly more in doing this. And then on top of it, even if I did hold on to Tesla, what was I going to do? Sell right now and then make this money? I just changed my strategy to more income generation based rather than long-term growth, and saw an opportunity to be able to do that while Tesla was trading sideways, so that I was going to be able to add more to it later. So I'm happy with my decision on this. And like I said, I will be adding to it going forward because I think these 4, Tesla, Amazon, SoFi, and Palantir, are going to be 4 monsters in the future. And I think all 4 of them at some point will end up paying dividends. And so I want to add to these for that long term, so that when they do start paying those dividends, it'll be that nice little bonus on top of it that can, kind of add to the rest of my whole entire dividend portfolio. Lang, smaller government, less government employees. Do you worry about the huge selling off before December 22nd or before January 20th? December 22nd, I mean, we might get a little bit going on. Sometimes you see, because the market anticipates the Santa Claus rally. So December, you see a lot of companies, hedge funds, and institutions selling a bunch off, doing their tax loss harvesting. We saw a lot of tax loss harvesting going on in March. So people were doing it back then. We saw a little bit on August 5th. So whatever's left over will end up happening because the market has been continuing to run. So people making all these profits, they want to kind of offset that with anything that hasn't been performing well. So, and there have been some stocks and companies that are out there that haven't been performing well. So things to pay attention to when we get into December are which stocks and companies are people going to be cutting loose and, cutting them to be able to do that tax loss harvesting on. If they're very good companies that you think are going to do well in the long term, could present a buying opportunity. Maybe you wait for all those to sell off and then buy them down at those levels. because with the 30-day wash rule, sometimes what these companies will do and these institutions will do is they'll sell off, they'll tax loss harvest, and then they'll buy back in 30 days later because they still have faith in the long term of the company, but they want to, cut those taxes out, and then they buy back in 30 days later, hopefully at a lower price to then lower their cost basis on it. So just some strategies that people use. So we could see a little bit of selling going on in December just because of that. Then we would get that Santa Claus rally, which goes into the end of the year. And then perhaps that does push until January 20th when we get the inauguration. We start getting Q4 earnings starting going on at that point as well. And we start seeing those numbers rolling in. And then we start seeing those numbers. That's where we could really start to see that sell off actually start. Where I thought that was going to happen this past year around February, perhaps it got pushed down the road a year. That's when we really start to see the sell off happening. Again, a lot of different things to get through until we get there, but that's some of the things that I'm anticipating going on over the next couple of months. What's going on, Kenneth? Have a good one, my friend. PLTY is quite new to EMX. Yeah. PLTY just came out. Reason I did not choose to do that one is because very much like Tesla and MicroStrategy, they ran so much. I think the upside is limited on them. And when it comes to PLTY, they're only going to be seeing their upside is limited even more, and they will see 100% of the downside. And when it's coming down, you will not, while you'll have the volatility, you're not going to get the payouts as much. So you've got to be real careful with that. And so PLTY is going to be another one I keep on my radar because I think Palantir is going to be very good long term. So I think I'm going to work at the timing of it. And if I see that, I think Tesla, Palantir, things like that have cooled off and kind of maybe hit a bottom and they're going to start coming back up again, that's the time I'm going to buy into those other ones as well. Right now, I'm just getting my toes wet when it comes to Tesla again. I'm not diving in too deep on it because, again, it's at that higher level. But that's what I'm going to wait for. And my strategy for buying them this time around as well is I'm going to buy in anticipation for the next month. So I will be buying on the X date. So when the X date comes in, whatever let's say the stock is trading at, the ETF is trading at $15 and the payout's $1. On the X date, it's going to drop that dollar to $14. I'll buy in at that level because it's going to drop down. And then, obviously you don't know what's going to happen over the next month. It could drop even lower than that. Or it could run. And if it runs, now you bought in that dollar lower and it runs back up and you make that profit back. So that's my strategy for this time around, just from the things that I've learned over the last year and playing with these yield max ETFs. Oh, man. Well, I'm going to get going, guys. So I didn't get much sleep last night. Somebody was bumping music outside at 2 a.m. Not very happy about that. I was exhausted at work all day today. But yeah, November 7th is the X date for coming for PLTY. Yeah, that'll be next month. Should be December around the same time. But all right, that's all I've got for you guys today. Always love chatting with you guys. Next week, I'll keep you posted. I don't know. I might end up doing the live stream Friday night. I will let you know. Obviously, Thursday, I will be enjoying family time. I'll be with my friends. My kid's going to be in town as well. So I'll keep you guys posted on live streams next week. But I will be doing videos at least Monday and Tuesday and Sunday of the maybe not Sunday. I'm going to try to do Saturday, Monday, and Tuesday. Keep you guys posted on that. But otherwise, thank you guys so much. As always, you are amazing, and I will see you guys later.